There we go. All right. Can you go through a sample on how to backtest structure? No, that's something for our Monday Q&A, Danny. But again, backtesting is the same way we would backtest any other strategy. You scroll through the charts and you look for opportunities that meet your rule for engagement. So if your rules say if price action hits green DSR, then I look for RSI to go overbought or oversold, excuse me. If RSI goes oversold, then I look for retest of structure. If I get retested structure, then I look for RSI divergence. If I get RSI divergence, then I buy next bar market. You just scroll through the same way you would with any other strategy, one bar at a time, or go through market replay, and you look for opportunities that meet those rule sets. But again, if you want to go into more detail about that, say looking at, hey, placing stops or placing targets, save that for Monday's Q&A. Again, that's the time we have to really go into details about our trading strategies and trading techniques. Yep. What else can I do for you guys today? For those who have not left, half of you guys went to the gym. Earlier, Jeff is like, I'm going to sleep. I'm in Australia. I'm going to sleep. I'm going to the gym. I'm going to hit the golf clubs. But is there anything else? Or do you guys just want to call it a day early? Time to go for a nap. Money management is the key to success. I wouldn't say money management is the key to success. The key to success is just being a consistently profitable trader. Having a trading plan that has a positive expectancy and having the discipline to execute that trading plan day in and day out of the market. That's the key to success. The key to taking your trading to the next level as far as profit goes, that's where money management comes in handy. Money management and position sizing is a beautiful thing, but let's not forget that it means nothing if you can't trade. So you can have the greatest and most aggressive money management strategy in the world. However, if you're not consistently making profits, you're never going to use it. Am I right? You're never going to put yourself in a position to add to your position size. Yeah. So first things first is learn how to trade. I see a question here on what is the fundamental side of the FOMC later. I have no idea. I stick to what I know. I know the technicals. I don't try to guess the fundamentals because usually it's it's a crapshoot anyway with that type of stuff. What do you think about Aussie Canada? I like it. It's one of my favorite pairs. It was in a lot of consolidation last year. It was by far our best performing pair for advanced pattern formations last year. So I like it. It was a newbie to my portfolio last year, so it did well in its initial year. Could you please draw euro dollar 1 hour? That question does not. That doesn't mean anything. I'm sorry. Can I draw euro dollar 1 hour? You gotta be more detailed than that. I'll go over to euro dollar 1 hour, but I'm not sure what you want me to draw from there. Sally says, as a pro trader, do you still backtest or do you just input the trades? What was this? That's something else. As a pro trader, do you backtest? You see I'm doing a little backtesting right now. Do you still backtest or do you just input the trades you did into your backtesting sheet as a way to see if it's all profitable? The pro trader, do you still backtest or do you still input trades you did into backtesting sheet to see if it's still profitable? Well, I have live results. So after you're done your backtesting, when you're trading live, you have live results that you can pull off of. I don't get enough time to backtest the way I want to. I have a checklist of things that I want to backtest. I'm doing some testing right now. But with the education side, I just don't have time to actually do the type of back testing that I want to do the hundreds and hundreds of trades that it takes. So I'll do a lot of forward testing. I'll do a lot of experimenting with ideas. I'll do either small position trading or demo trading with some ideas I have on as forward testing before I see if it's even worth back testing or not. But if you ever go on to education, or I would say even money management, you just don't have a lot of time. You don't have the same amount of time to work on your trading that you would want to. Let's put it like that. So I have a checklist of stuff I want to do, of stuff I want to back test. Unfortunately, I never get the time to do it. Whenever I get the time, something else comes up. So I try to do some forward testing every once in a while with some ideas I have, but that way I can kill two birds with one stone, but it's not the same. It's not the same. Do you close your positions before the news release? I don't have any open positions on, so no. Let's say you know that a bat formations on the 5-minute chart of the euro dollar. Let's say you know that bat formations on the 5-minute chart of euro dollars is profitable. Do you still need to keep back testing? Well, you don't know it's profitable if you don't test it, Sally. How would you know if it's profitable over time if you don't test it? So you gotta do the testing to know that it's profitable, or know that it has a positive expectancy, I should say. All right. So I've back tested it first. All right. And then what? Then you do it in real life trading. Correct. Now, I would say you still want to demo trade before doing live money, either demo trade or live trade with a very, very small account. Because you still want, there's a difference between back testing is very easy, because if you see something and you miss it, you're like, oh, no, that was a cipher. I can always go back to it. You don't have that luxury in real-time trading. So you want to make sure you can actually execute what you're doing in real life. I've had a handful of strategies that performed very, very well during back testing. However, I couldn't execute them at the same level during live trading. The spread ruined it. The speed of it was a range bar chart, so the speed of price action ruined it. So you want to make sure that you can actually execute what you're doing in real time before you go onto live trading. No, we can't go over to ROE for bat formations. That's something for our live Q&As. You have to be careful with back testing because sometimes they're biased. Yes, what I encourage my clients to do is I say look for losses. Look for as many losses as you can. That's what whenever I back test, I look for as many losses as I can. I would much rather have my back testing results error on the negative side than skip a lot of losers because, it wouldn't have been trading that day, or it wasn't close enough, and then get negative real-time results. So I always look for losers because our mind wants to find winners and avoid losers. We talked about pain earlier, pain avoidance and that stuff earlier. Our mind wants to find winners. So when you backtest for, remember, you're backtesting, you're going through hundreds and hundreds of trades, guys. Eventually your eyes kind of get stuck, and you start seeing what you want to see. If you're on a losing streak, say you the last 5 patterns you back tested fail, you're looking for that winner, and your eyes will try really, really hard to identify that winner and avoid that loser, and make any reason possible, if it is a loser, to say you wouldn't have taken it. Oh, it was a non-farm Friday, so I wouldn't have been trading live the markets that day. Trust me, it happens. Do you go for a graceful exit technique after you enter the pattern formation, but don't get stopped out by an X violation? I do not use the graceful exit technique. No, there's nothing wrong with it. There's nothing wrong with it, but I personally don't use it. Why can't I see you in the Trading Power live room? You're not in the live room right now, Chin. This is you're on a Google or a YouTube Hangout right now. Now I'm streaming the live room to you guys, but you guys are watching on YouTube, Chin. So it's different. Now you can come join us in the live room. We have a free 1 week trial. I'd probably wait till next week because I'm going to be gone Friday. But go to our website, tradeempowered.com, sign up for a free 1 week trial. You can join us. What's your opinion on EAs? I don't personally use them, nor like them, but it doesn't mean they're bad. You just got to make sure it's profitable and make sure you check it. Just don't assume that mechanical systems don't assume that they can just run by themselves. You still have to manage it. Akil, for someone in full-time employment, which time frames would you recommend to trade? I would recommend going with the higher time frames. If you're going to be a swing trader, you can do all the analysis that you need to do, depending on how big your portfolio is, with well under an hour in the morning. So you can go through your trading portfolio. You can set up all the trades that need to be taken for the day, or you can write down all of the areas that you need to pay attention to for the day before you go into work. And then, just make sure every once in a while, just put some time out there to check the charts, just in case you have to manage a position or adjust something. So, on a lunch break or something like that. But if you're swing trading, longer, higher time frames, 4-hour charts, you only need to check the charts maybe once every 4 hours, if that. So I would definitely go towards that type of trading. I wouldn't try to day trade unless you can dedicate a consistent certain period of time to the markets. Akil, do you go over trade setups? Like if I shot you a trade setup, would you be able to check it out? My thought process is no. Nope. At one point I used to, but what happens if I open up that door, aside from say 12 weekers, we will get, I will do that for 12 weekers, Sean. I will do it for 12 weekers. But aside from that, it just opens up the door to me feeling obligated to answer everyone's question about every single trade setup. And most of the time I would tell you this, you guys know my answer. What does your plan say? Because you'll get, you would probably send me, you'd give me a good chart, but you get people that are like, hey, look at this euro dollar chart. Should I buy it? And I'm like, well, what does your plan say? Well, just tell me if I should buy or not. Well, I think you should follow your plan. So does that mean buy or sell? And it's just, I can't, you can't do that. So that's a no. I tell people to follow their plan. If they don't have a plan, they need to work on developing a plan. Hey, Maurice is in. Why are you in here, Maurice? Why aren't you in the live room? How much money should a beginner start with 5 open to 2,000? It's up to you. I would say, you want to give yourself, because it's different now. Typically, I would say you would need at least like $3,000 to $5,000. But a lot of brokers will allow you to trade micro lots now, which opens the door to, you can live trade with a much smaller account size. So if you have a broker that you can trade 10 cents a pip off of, you can probably start with a couple $1,000s. The key is you want to give yourself enough room to be bad, because at some point when everyone starts out, they're going to be bad. So give yourself enough room to be bad and not be in danger of blowing an account, getting discouraged, and quitting trading forever. How did you take the jump from a job to a professional trader? My story isn't good for that. But I quit my jobs before I started trading professionally. I quit my jobs, then I decided to learn how to trade. It was probably not the smartest approach, but for me, and again, this is something else we talked about yesterday. Trading's got to be either a want or a need for you. It's got to be either a want or a need. If you want it, you're going to go for it a little bit. But if you need it, you're going to go all in. And for the longest time, trading was a want for me. I wanted to be a good trader. And what would happen was I would dip my toe in trading. I'd do a little bit. And if it didn't work, I'd be like, I've got these 3 jobs I'm doing on the side. I can learn trading next month. And I just kept pushing that ball back and back and back and back, because it was always a want. There was no necessity. So when I quit my jobs, I got, well, one of my contracts weren't getting renewed and I quit the other two. But when I quit my jobs, what happened was, sorry, I got ants crawling through the, the window right now. When I quit my job, it became a need. So it was like, okay, you don't have a choice now. Like you're unemployed. You need to be successful at trading or you're going back to cleaning toilets and stuff like that. So I did the opposite approach, but what I would recommend is that you wean yourself into it. We had a good trader here in the live room years ago who he was trading for a while. He was in the live room for a few years, kept getting more successful. And what he did was he just slowly cut down the hours at his job. So instead of working 40 hours a week, as he got better at trading, he flipped his schedule to work 30 hours. And then he went from full-time to basically part-time to 15 hours. And as he got better at trading and that started to bring in more supplemental income, he started reducing his work hours to the point where I'm not sure what he's doing now, but he may not be working at all right now. He may just be off of trading, but it takes, understand this, guys, it takes a massive amount of money to become a full-time trader and live solely off your trading income. I get yelled at for saying this, but I always say, unless you've got about a $200,000 account, you probably shouldn't be using trading as your sole source of income. The internet goes crazy. I get yelled at, screamed at. What are you talking about? But that's my belief. You probably need around that much. And again, it's going to vary depending on your lifestyle. But you need enough to continue to grow your account. You need enough to pay yourself each month, essentially to pay for the bills. And you need enough to withstand the drawdown, because everyone forgets the drawdown. Everyone forgets to prepare for the drawdown, and that will kill you, especially if you're reducing position size. But that's pretty much what you need, Daniel. It's got to be a need. You have to need to be successful. Not want. You need to be successful. Either you're all in or you're not in at all. Well, if you're that, yeah, well, if you're that determined, Sally, it may not seem like it. It may be a need for you. You may be so determined that you're telling yourself, hey, I want to be successful, but I have no choice but to. I've got to do this. How can I use the RSI like a pro? Depends on your strategy and technique. Depends on your trading style. I personally use the RSI to help identify oversold and overbought conditions. I also use it to look for divergences in the market. There are many techniques to using it, though. You can follow John Hayden's approach. I guess it's not John Hayden wrote the book, but it was someone else's approach where he uses the RSI, doesn't even look at price action. He just pays attention to, I think it was the 66 level, the 33 level, and the midline at the 50%, and he plays the crosses over it. So there's different ways you can use it. I use it for overbought and oversold conditions, along with divergences in the market. Hey, Kill, big follower of yours, great videos and great advice. Hey, thank you. Appreciate it. Josh says 100% true about the 200K amount. If you try to trade with less than that, you tend to oversize positions to accumulate more per position and wipe out. Thank you, Josh. We just had a great conversation earlier in the trading room, but this is before I put it on YouTube, about that same thing, about traders that are getting 100% a month, and we showed them, yes, it's possible. It is completely possible to get 100% a month returns if you're trading an inflated position size. But what no one thinks about is the downside. What about the opposite? What about when you have a month that isn't so good? Well, now that overinflated position size is taking losses, and like you said, boom, account blown. No one thinks about that side. You need to trade a safe amount. What's the name of the book talking about the RSI? It's called RSI: The Complete Guide. I don't recommend reading that book, though. Especially, I know your situation, you're a newer trader. It's not a book that's going to help you. It is a book that's going to confuse you more than it's going to help you. This is a book that Jason Greystone picked up. started reading it and just threw it away. So I don't recommend that book. Now, if you're someone that's interested in the RSI, if you're you're already an established trader, you know how you're trading, you know how you're using the RSI, you're looking for that extra knowledge. It's an interesting read because it's a completely different approach to the RSI than what most people are taught. It's the exact opposite in a way. It's very interesting, very confusing though, and I think for a newer trader, it's going to hurt you more than it's going to help you. In fact, I can almost guarantee it's going to hurt you more than it's going to help you. So I don't want to say it's a bad book. All right. RSI, the complete guide, RSI, the complete guide. Go for it. I put my warning. You guys heard me, right? I put the warning out there. So be warned. So if you come back and you're like, man, I started blindly following what you said in the book and I lost $10 million, don't blame me. How important would you say successfully operating a demo account is before opening a live account? I do think it is important. Again, you need to make sure that you can efficiently execute your strategy in the live markets. You also need to learn how to execute orders. Believe it or not, especially if you're on a lower time frame, if you're day trading, something as little as just putting stops and limits and targets and entries on, that takes time. And if you're not proficient in doing that, you may miss a trade. You may be, okay, I'm supposed to buy euro dollar right now. Crap. How do I, where's my chart trader? Sell, buy, exit, get, and then before you know it, the trade is gone. Right. So you have to get familiar with using that. You just need to understand that psychologically, there is going to be a difference when you go from demo to live. There is very little pain, and typically in the demo account phase, you haven't made the switch to process over outcome as far as your mindset goes. So there's very little pain in losing trades, and there's very little greed in winning trades. As soon as it's live money, it's like something switches in our brain where every single pip loss, you're looking at euro dollar and you're like, 29 pips, move stops back. Okay, market's going to reverse. You start doing stuff like that with live money because you don't want to see that money go away. Where a demo account, you're like, follow the plan. And then vice versa, when you're up money, live money, you see yourself up 30 pips and you're like, I want to take it. I want to take it. I want to take it. Where in demo money, it's you stick to the plan. So there are subtle differences. What was I testing here? Gosh, I don't even know. This is what I talk about. I got too much going on. I have no idea what I was actually testing here. Oh well. Don't matter. I can't give any advice on brokers. I see nothing wrong with ECM brokers compared to other types. Let's say that. But we're not supposed to recommend position sizes. We're not supposed to recommend brokers. We're supposed to give you the disclaimer that trading is risky and that you should be prepared to lose all of your money, and that because I am unlicensed, that none of this is advice. This is just my own opinion. Follow at your own risk. Whew. Now that that's out the way. How different is trading gold from FX? Is it very different? Not if you're a trader, no. There are going to be some fundamental factors that will have a bigger effect longer term. But if you're trading it, you can trade it the same way. If you're trading gold dollar. Akil, are you using a 7-period RSI? Yes. Options are different than Forex. Yes, they are. It's a different ball game. Now you can use the same skills of technical analysis with option trading, but the factor of time comes into play, which makes it a lot more difficult. I've never traded options. I've never attempted to trade options. But the timing factor, I know for me, that would destroy me. But there is also different techniques you would use for option trading. You wouldn't use the same techniques necessarily as you would to trade other markets. You can use the same analysis to help kind of build your opinion, but there are different techniques that you would use, a lot more hedging strategies in option trading. Akil, you have your fixed times of trading, right? What if something comes up? Do you then trade after that, or do you wait for the next day? Something comes up like what, Sally? Yeah, trading. Yeah, Mondays and Fridays are typically a waste of time to trade. Those are typically break-even days. Again, Monday, at least the U.S. markets are still waking up. People are, you know how it is Monday morning. They're strolling into the offices. No one wants to do anything. They're spending a lot of their time just building their basic opinions of building their basic opinions of the market for the week. Again, Friday's the exact opposite. Friday, everyone's foot is halfway out the door. No one really wants to establish, that a position before the weekend. There could be a lot of closing outs, trying to get flat before the weekend. So typically your best days for trading are going to be Tuesday, Wednesday, Thursdays. If you have a sick child to take care, I just don't trade then. Yeah. If something ever happens, sick child, family emergency, even if it's a day where I'm just mentally out of it, we want to do that self-check before each trading day. If it's a day where, say, like the girlfriend broke up with you and, the dog died and you're just mentally in not a good place to trade, you just don't want to trade that day. You never want to trade when you're in an emotional state, because you're more likely to make those trading mistakes. You're more likely to give in to fear. You're more likely to revenge trade, to become greedy. You're on tilt. So as you go through your emotional checkup each day, if you're not hitting 100% on that emotional check, you don't need to trade. We had that a few times last year in the syndicate. Remember, we took a big drawdown, not a big drawdown. We had a big period where we just couldn't make new equity highs in our syndicate over the summer. And we had a lot of days where markets were coming like 3 pips away from targets and then reversing and stopping us out. And we had a few days where Jason came in on War Room. He came in our Monday morning War Room or Tuesday morning War Room meeting. He said, "Hey guys, I'm just in a bad mental place right now, so I'm not trading today." And that's perfectly fine. There are days like that where even with professional traders, where you get so frustrated, you just know you're going to do something wrong. Well, you've taken, 5 losing trades in a row and 3 of them should have been winners, but it stops you out on the spread or something funky like that happened. You're like, today is just not a good day for me to be trading. And that's okay. You take the day off, you go, play around the golf, do something to refresh the mind and come back for the next day. Because I'll tell you what, if you're not trading, you can't lose money, right? If you're not trading that day, you can't lose money. If you're trading and you're unstable, you can lose a lot of money. And with conservation of capital being our number one goal, right? We don't want to lose a lot of money. When would you stop trading if there was a huge drawdown? Everything is possible. So maybe pattern formation stopped working. I would stop trading once you do a lot of analysis during times of drawdown. So, the first thing you always want to do is you want to make sure that is it the system or is it you doing something wrong? So if you're in a big drawdown, you want to check, all right, is it the system, or are cipher formations just failing? Or am I making some type of mistake on my behalf? Analysis mistake, a trade management mistake, something like that. You want to give your system enough time to breathe. You don't want to be too quick to pull the trigger. It was, I think, 3 years ago, I was very close to giving up on Gartley formations. We had a year where I think it was the first. I let it ride through the first half of the year, and I'm doing some analysis. I do kind of a big review every quarter. And I'm looking at my statistics, and I'm like, man, this has been a good year, but Gartley formations have just stunk. Gosh, what are they doing? They're killing my account, and it was getting really frustrating. And I was looking at them. I'll see if we're get filled Aussie CAD yet. I was looking at them, and I'm like, I should just stop trading this. That stinks. I should just stop trading this formation. And, I thought about it. I said, Akil, you got to give it time to breathe. You got to give a big enough sample size. Half a year just isn't enough. And I'm glad that I didn't stop trading because Gartley's formations just exploded the second half of the year and they made a killing. And I'm sitting back like, thank God I didn't scrap it. So you want to give it enough time to breathe, but you also want to make sure to check if it's you. And all strategies are going to go through drawdown. So, if you think that the key is once a strategy hits a drawdown, you quit and you move on to the next strategy, that next strategy is going to go through a drawdown as well. All strategies go through drawdown. Those who are disciplined, those who are patient, they're rewarded by fighting through that drawdown. We were looking at this earlier. Let me see if I can bring it up. This was a great example. And I'm so glad people that were in the syndicate last year got to see this. Perfect example. If it loads up, of trading through a drawdown. Let me just, if you can see this equity curve right here, look at this. This was our summer last year, right? We refused to make new equity highs for 20 weeks, I think it was. Oh, sorry, I loaded this thing up like 8 times. Bang. We refused to make new equity highs for like 20 weeks. From week 20 to basically week 41, we just went sideways a little bit down. Now imagine you stop trading right here. You just give up. And you're like, whatever. You trade through it. Look what happens. You get rewarded. But unfortunately, this is the area most traders don't make it past this area right here. This is somewhere in here is where most traders quit when it gets hard. And they go on to that next magic system or whatever it may be. So trading is about pain, guys. It's about taking pain and dealing with it. It really is a grind. It's not fun. It's not always fun by any means. It's very frustrating, very stressful. But how much is enough? You gotta give yourself a big enough sample size. There's no magic number. There's no saying, well, if it doesn't work for a month, it's gone. If it doesn't work for 6 months, it's gone. You got to go through your evaluation process. You got to give it time. This is why we trade a portfolio, because certain strategies are going to work well while markets are trending and be horrible in consolidation. And unfortunately, markets go into consolidation a lot. And if a particular pair is in consolidation, your strategy is going to be hurt. Dollar Canada right now. Dollar Canada is very trendy. Dollar Canada has been horrible for patterns over the last, year or so? A lot of our 12-week transformation members have been testing it. And I think they said like the last couple of years for Canada has been horrible. Well, it's been a very trending market. You're not going to see a lot of pattern formations in a trending market, a lot of ones that work. However, it won't trend forever. It will go back into consolidation. When it does, pattern's going to catch fire. And then when Canada goes back into consolidation, another pair is going to start trending. That's why it's important to trade a portfolio, so you have that balance. Stochastics versus RSI. Who is number one? Either one. It doesn't matter. Personal preference. There's no magic system. There's no magic indicator. If there were, everyone would be trading that same indicator and everyone would be doing great, right? There's no magic indicator. All that matters is that you use whatever indicator you need to use efficiently and you use it consistently. That's all that matters. If you're going to use the stochastics, you use it the same way every day. If you're going to use the MACD, you use it the same way every day. Consistency is the key. Hey, 324 pips today. My girl, well done. Break out the stickers. Oh, yeah. All right, let's get a few more questions in, gang, and we're going to call it a day. I don't know if I'm going to keep this up on YouTube or not. Take care, Sean. Yep. See you tomorrow. 2 o'clock FOMC. I believe it's 2. It's usually 2 o'clock. Correct me if I'm wrong, but 2 o'clock FOMC. Let's be aware of that. Get your helmet. Hide under the desk. Gather your rations, your water. women and children, protect them. All right. All right, gang. We'll shut things down. Thank you for joining me, YouTubers. Thank you for joining me as well. Sorry about the little microphone delay in the beginning, but I'll see you tomorrow for some, hopefully the markets wake up and we can make the best out of our last trading day of the week. Again, I will be gone on Friday. Fun drive to Carolina. Until next time, plan your trade, trade your plan. Have a great one.